Hello. How's everybody doing? I hope everybody's having a great weekend. This is 50 pips, 26th of the 1st, 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis for educational purposes only. So let's see what's going on. Should be an interesting week. We had some moves on Friday, so let's see what to expect going into the week. Before we go into this review, I just want to say, keep in mind that tomorrow we're going to start with basically the morning session. We're going to have IFO out of Germany, so that's going to be pretty interesting, just especially seeing how euro is traded. And then we've got new home sales in the afternoon, so we do have data points. It's not a traditional quiet Monday. We do have some data points, and then throughout the week we also have a bunch of interesting stuff coming out. And don't forget, we've also got basically our BNZ, the rate statement, and of course we have the FOMC on Wednesday. Okay, so clearly a potential for some moves this week. I'm going to focus on some on the main charts for the week. Gold, what's going on gold? As we've been discussing this for quite some time, okay, since basically pretty much beginning of December 2013, about how gold was moving into that 1200 level, and we were looking for this to put in a double bottom and reverse back up into the 1300, possibly into the 1400 level. Okay, when we came back down into this 1200, pretty convinced that we were going to hold and pop all the way back up. What happened actually is we took another stab lower again, and what we said is, okay, well, this isn't exactly what we were expecting, because we're expecting this to get some more of an aggressive press to the upside, but still that doesn't change our scenario. Our focus was this dip low here in June, and as long as this whole support zone held, or we couldn't get any traction below it, right, we're expecting this to move back up, not necessarily into the 1400 as we said the first time, but at least back towards the 1300. And what happened is we had this strong hold, and bam, we started to rotate higher, which gave us more conviction of the view of the move back into this 1300, also because we had the confluence of this 200 DMA that's going to slowly coming back into here. So as we stay stuck in this 1300 1200 range, what happens is, as we've been saying on Twitter, much to do about nothing, as this 1250 remains pivotal for action, right? And we have had a lot of wheeling and dealing here, but globally speaking, once we held this bottom zone right here, 1226 is held, we popped in, we got a bit of wheeling and dealing, but we were chopping around this 1250, made a little stab lower, 1226 is held again, and bam, now we've broken above this trend line that was acting as resistance. Now, as long as this acts as support, as long as any move back into the 1200 acts as support, no change in outlook. We're looking for this to move back into the 1300s in line with this 200 DMA, and this is what's likely going to be the next pivotal level. Especially if the equity side keeps on slipping, we should see this trying to attempt to move back into the 1300, and that's going to be the pivotal level. Should we hit that level, then all of a sudden we're going to get a range shift, at least intermediate range shift, which we're going to move to 1250, 1300, 1350. Okay, so again, look what happens. This trend line is coming in around those 1250s. It's still a pivotal level, whereas before it was a pivotal level to hold the downside for the shorts. Now it's going to be a pivotal level for the longs to hold the upside. Okay, second thing going on, what's going on the yes? So we had a nice move on the yes. Now I'm going to keep it very simple on the chart. Okay, we talked about the fact that we were pressing higher, we couldn't break these 1850s. Sellers kept on coming in, and every time we popped down, we kept on seeing buyers coming in. So we had a feeling, we're saying this has to fail from higher levels, right? So it goes back into those highs. It actually fails without breaking out that 1850, and it started to move down aggressively. Now, what we've been saying for quite some time is the market can remain stubborn for longer than you can remain solvent, and this is holding a strong bid, but it is not normal, or it's not, rather I should say, healthy to see a market, if you look back also for the whole of last year, just to move in one direction, everybody getting so convinced about the long side, so stubborn, without any kind of, and I say again, healthy correction, right? So we said at these levels, sooner or later what will likely happen, we'll get a 1 to 2%, maybe even 3% correction, and people are going to freak out, but really there's not a lot to freak out about, because it's just very healthy. When a market that practically hasn't had any downtick the whole of last year, this is starting to be, for now, it's still just a healthy correction. So what to look for going into the week now? To the downside, what I would be looking at, and I think a lot of people will be focused on this level now, is especially a lot of the bears want to see these 1750s, right? I suspect that because this is going to be such a key level, probably a lot of people are going to be waiting to buy this too. You will probably see some of the bears starting to lighten their shorts ahead of that level. You have to respect that last time we came into here, you see all these wicks here, you see the bids coming in supporting. So I'm pretty sure you'll see some covering or some lightening up as we press closer towards this level. And then what will likely be the focus will be is the bounce back into the 1800 going to get sold for a test of that 1750 and move down. Okay, so the levels, at least now, because we're going the outlook for the week, and so to keep an eye out for are really, again, 1850 to the downside, 1750 to the upside, 1750 to the downside, and this 1800 remains pivotal for action. Okay, now you see these moving averages come in pretty much in line with these levels. So that's the 100 coming in at 1750. If we break and get a hole below the 1750, then what I'll be focused is that 700. That's pretty much where that 200 DMA is coming in. Now I would suspect the odds for us going straight into that 1700 without any kind of retracement aren't very high. I would suspect that even if we're going to go there, we'll still get some kind of a bounce at a 1750 that will probably get sold back into 1790s, 1800s, protecting that. So that's really the level, especially for momentum, you want to keep an eye out for there. Again, I don't rule out this popping back hard because it has tended to have these violent reactions. Now keep in mind that all the people that like stats and stuff and seasonality indicators are going to be very focused on how we trade this week, because basically this is the last trading week of January. So all the guys who focus how January goes, the rest of the year will go, very high odds that if we have a negative close in January, we'll actually start and close the year, continue the year in negative fashion. So a lot of people, all the bulls, are really going to be focused on that. Again, I think it's more interesting for just to have a chat or talking about it. It's not something I would necessarily trade on very aggressively, but keep in mind a lot of people are going to keep a very, very close eye on that. So the bulls that are looking at that have 5 days pretty much to jack this back up and close it positive. So it's not an easy task, but we'll have to see what happens. Again, I would not, a lot of people emailing me or sending me notes on the blog. Again, there's nothing to freak out. It's just a correction. We haven't had any corrections for a long time, so people are not used to seeing the market correct. But for now, it's still a healthy correction. I would consider even, unless it goes down in a straight line, ultimately a move back into 1700 still to be a healthy correction. But I think those 1750s are going to be a pretty difficult nut to crack, at least in the short term. Okay. Another chart a lot of people are talking about is the yen. I think here, and I posted a chart on the blog about the fact that we broke below those 0280s, and I really consider that to be a pivotal level. A lot of people were looking at this, I think it was on a 4-hour chart, right? And they saw this, the buyers coming in, everybody said, that's it, we're going to jack it right back up. I really think the focus is not necessarily what the wicks are telling you. I think the focus is how we behave around the 10280s. As long as we hold below those 10280s, as long as we hold below this breakdown point, I still consider this to be trading with a heavy tone. And as we've discussed for a long time now, it would, similarly to the ES, a move back into the 100, it would just be a healthy correction here. Okay, there's a lot of factors in play, but keep in mind that as long as we hold below there, that 100 could easily come in play. I think if you take a step back, it's a bit easier to see on the chart. Basically, we had this whole sellers coming in, capping this, and then finally we managed to break above this previous resistance, then we, bam, broke above it. So clearly here there's going to be a first interim support point coming in around the 10160s, 10150s, but clearly now that we've broken down here, the risk for these 100s is clearly an important one. This is the 200 DMA. Keep in mind, this level was bought, respected very nicely. So this is something to be reckoning with. I suspect a lot of the guys trading the short side will be looking to reverse into this area, 100s into the 97, 70s, 90. This is going to be a very, very strong support zone, but I would expect to see buyers coming in well ahead. Going into the week, at least short term, what I would look at, I would clearly look at these 102.80s as being pivotal. As long as we get sellers in that level, expect this to trade heavy. If we start trading back above, then I wouldn't be surprised to see this catch a bit of a bid tone, okay? What else have we got? We got Euro and Cable. What's going on with Euro and Cable? Euro. Again, no change. 50 sounding like a broke a record, but I still thought this had to fail from a higher level. We're still looking for this to move back into the 37.50s, into the 37.70s zone, at least intra-week. Last week we didn't quite get there. We saw the move back down. We came right into this 100. We said if we get traction below that 100, clearly the 34.50s are going to be in play. If we can't get any traction below that level, we'd expect this to move right back higher into those 37.50s, 37.70s we talked about, okay? It's fairly clear, I think, even if you look at it on a 4-hour chart. Let me get rid of these moving averages. Very slow market clearly trying to fish for stops, but every time we had press lowers, we had buyers coming in, right? And especially after we had this last press below the 36s, right? The market had a perfect scenario to really smack this back down and make a run for those 34.50s, and it couldn't. You see this, we started to press back aggressively. We put in a low, you know, on the 20th, and we just, every time we came back in there, we had bids coming in supporting, unable to continue lower. So not surprising, into the data releases, into the end of the week, you know, shorts starting to give up, start to get some bids, some buyers coming in, and bam, we popped right back into this, above this 36.50. Now we talked about the 36.50 to 36 being a very important level, and I think for the shorts, the fact that we didn't manage to hold price below these 36 doesn't bode very, very well. You see, we took out stops above these highs, but again, I think the bigger stops are higher up, so we did get some traction, but really not enough to move it, at least not into the end of the week. So going into the open here, you've got to, you know, you have to respect this whole zone. But again, I think the bigger bids and the bigger offers are laying higher up and further down. So I consider this to be one of those zones where I would say don't get confused about velocity of move inside this range. It can move very quickly, but really, unless we're back below these 36s and we hold very aggressively and we get some traction to take a stab at those recent lows, and then, you know, bears really can't ask for anything more to really get this to press down, or we need to get traction back above those highs, which are incidentally the yearly highs, right, where we opened. So those are the big levels to watch. Don't get confused about what happens inside that range, but the way this is trading, this is still looking like it has an underlying bid tone, and I still expect this to trade higher, and if it has to fail, I still expect this to fail from a higher level, okay? Broader longs are still in play. Nothing has really changed there. Cable, what's going on cable? So we got to move back into those 66.00s. We kept on saying also that, you know, it was a bit of a sucker's play to try and fade that, especially with the 66.50s, because you know, the way this is trading, this was clearly bullish, and there was just going to be, the conditions were just so strong, and all the bids that were coming in so aggressively just pointed to very, very aggressive moves. So it would be very tempting to fish for the stops. Now it's telling that we didn't manage to break above and hold above. Just a reminder, as we talked about it, we had this whole, you know, our whole move back into those 59, 30s, that kept on holding. We're looking for that to complete back into the 66s. So what we, you know, the followers that have been listening to this for a while, that move is done and dusted now. Okay, now we have to see how this resets, but that big move back into the 66s from the 59s areas is done and dusted. Now this area is really important from a weekly perspective, because all you have to do is look a bit to the left of the chart, and you can see, you know, we haven't been back at these levels since 2011. Okay, so there's going to be a lot of resistance points coming up here. Now the big question is, have we put in some kind of a complex top here, and are we going to continue? Are we going to crumble, or do we still have some more upside? You know, despite the fact of whether rates are going to rise, whether Carney's going to talk down the pound, we're just looking at this in terms of technical fashion. Okay, so going into the week, first of all, it's relatively rare for to have such an aggressive sell-off that then just completely gets bid right back up into the scene of the crime on the Monday. If that happens, that's clearly not a move you want to fade to the short side. You need to respect that. What I would be looking at going into the week now is the bigger outlook doesn't change. You know, we talked about this 63.15 to 62.50 being the big support. As long as we don't get a daily close below that, we can't really turn extremely bearish on this yet. Now, if we get a daily close below there, I think we could easily correct back down into this 59s, at least inside the 50 something, right, into this 50s. Now, as long as we get bid there, then it's a different story. I would say sideways chop to grind higher. Now, however, if this move is going to continue in an aggressive fashion to the upside, the longs do not want to see these 63.50s tested again, because even though they're strong support, these are going to, you know, it's kind of like a wave smashing into the wall. It's taken a lot of damage, so if we get back into there, it could easily start to trade heavy. I think what I would be looking at going into this week is this whole, you see this whole zone here, this breakout zone into the 64.50s, where we kind of chopped around, giving us a lot of very nice opportunities to add to longs, to build a base, to finally make the final push back into the 66s, right? As long as, you know, we might try and trigger some more stops to the downside, but as long as we come back in this area and this stays supported, you know, I think it's still sideways chop to grind higher. We could easily see little pops back higher. If we don't get any bids here, then I suspect it's going to trade relatively heavy for, you know, a heavy move back into that area. To the upside, should we get a pop? I think the level to watch is still the same now, 66 into 66.50s, right? Is that level going to be protected or not? But right here, we could see, similar to what we discussed on Euro, we could see a lot of choppy action here, but we really need to see a break outside for some momentum and flows. Okay, so that's pretty much it. I hope you've enjoyed it. If you like the content, again, don't be shy about sharing it or liking it, whatever. Again, I wish you all a great rest of the week and have an awesome one. Thanks for listening, and I'll see you guys on Twitter and on the blog this week. Have an awesome one. Take care. Bye bye.